Hey guys, welcome back to this YouTube channel. I'm so excited to jump into this report for the month of May with you guys because the past 2 months in Calgary have been extremely strong and we've seen huge increases in prices. Few things have changed this month, so make sure you stick till the end so you know what's happening in the Calgary real estate market. Before we get started, it's Iyer, your Calgary Realtor. Thanks again for tuning in if you are a subscriber, and if you've not, make sure you subscribe, because this channel is full of important information like this. And if you are looking to make a move in the Calgary real estate market, whether it's to buy or sell real estate, make sure you reach out. My link's in the description. Book a call. I would love to get the hi hellos out of the way and just have a chat and understand what your goals are in the real estate industry. And then based on that, we can set you up with a game plan and make sure you are set up for success in the next 1 year. So diving right in, first, we take a look at the summary by the Calgary Real Estate Board. As we can see here, I will call out the highlighted points. Feel free to pause and read in more detail. Sales in April rose by 7% compared to last year to 2,881 units. Pace of growth did ease compared to earlier this year. We've had a crazy first 2-3 months. So compared to that, we've definitely eased off a little bit. Sales remain 30% higher though than longer term trends for this month. So while we are better off than the last 2-3 months, as far as longer term trends go, we're still very, very strong. There were 3,491 new listings in April, 11% gain over last year, but only 3% higher than the longer term trends, which prevented essentially any further deterioration in the inventory situation. However, 2,711 units in inventory. Levels are 16% below last year and half of what we traditionally see in the month of April. So overall, as you can see, the three main points, we are 37% higher on sales. We are 3% higher in terms of longer term trends for new listings, which is very low. So therefore, that leads us with less than half of what we traditionally see in April when it comes to inventory. Homes priced below $500,000 have reported 29% decline. Meanwhile, we are seeing supplies grow in homes priced above $700,000. And as we have discussed time and time again, that's not where majority of the people are shopping. Persistent high interest rates are driving high demand towards more affordable products in the market, and at the same time driving listing growth for higher priced properties. And this statement couldn't have said it any better. It explains exactly what's happening in the market. Because of the interest rates and because of the high pressure on buyers, essentially they are being driven to cheaper and cheaper properties to try and afford properties on this market. But at the same time, buyers who are on the upper end on more expensive properties are being forced to sell because now they're coming up for renewals, or they either need to downsize or move. And so there's a complete disconnect between the type of properties that are coming on the market versus what the buyers are actually looking for, therefore driving prices on the affordable side of the market. Sales to new listings ratio, 83%, which is pretty high. Generally, anything above 85% is what I flag. 83% still relatively high, and a month's supply of less than 1 month. This continues to favor the seller, driving further price gains in the market. In April, the unadjusted total residential benchmark price reached $603,700, a 1% gain over last month and nearly 10% higher than last year's levels. Moving on to the benchmark prices across different property types, and I've also marked out how much they have increased month over month. As far as the total residential price goes, we are at $603,700 as we just discussed. That's a $6,100 increase month over month and a 9.9% increase year over year. The detached price is at $749,000, an increase of $9,300 month over month and 13.1% higher year over year. Semi-detached, $668,400. That brings us to a $10,400 increase month over month, a 12.9% increase year over year. Row Townhouse brings us to $458,100 for the benchmark price, an increase of $9,400 month over month, and 20% higher than the same time last year. one of the highest gains. And apartment, very close behind at 346 to 200, an increase of $8,500, 17.7% increase year over year. So clearly, if you invested in the affordable part of the market, rural townhouses and apartment, and those are also the cheaper parts of the market. So the cheaper parts of the market plus the cheaper areas, all of those have seen the highest appreciation in the last 1 year. When we take a look at the different property types, this includes all property types across different regions across Calgary. You can see the benchmark prices. Of course, the highest gains we are seeing is in the south. So month over month, we saw a $9,000 increase, right, at an 11.6% year over year. Northwest, there's a steady slowdown over the past 2 months in the pace of increase, despite the extremely high demand for Northwest and West. This could have also had some correlation to the detached properties in Northwest exiting the $700,000 range. And so now it only caters to the non-affordable market. As far as the West goes, after 3 consecutive months of over $15,000 gains each month, finally we are seeing a significant slowdown in the pace of increase. So we are actually only $1,700 increase month over month. And as far as Southeast goes, the only part of the market where the pace of gains actually remained consistent to last month. Across the market, everywhere else, we have seen slowdown. So what is causing this entire slowdown? Is it just because we're having more listings, but the listings are all in the higher price range? Is it because of interest rates? Is the market getting more and more unaffordable as the days go by? Or is it just the season of plateauing and we've just had phenomenal gains over the last 2 months? And so it's time to slow down a little bit. But as you'll see, the price gains are still nothing to laugh at. We are still in a very strong upward trajectory. You will see that very soon. So right here, you can see the benchmark price going from Jan to Feb to March. We had a very strong upward trend that has shifted a little bit sideways, but it's still much stronger than what we saw in the second half of last year. And as far as the sales surpassing inventory last month, that has continued this month and even increased a little bit. So that's going to continue to put pressures on the market and increase the prices as we go forward. So even though we've seen a slowdown in growth pace, the sales continue to outpace inventory, same as last month. Now taking a look at the factors that actually are driving all these numbers. So as far as sales go, we saw 2,881 sales. That's an increase of 217 over last month. And the new listings only increased by 319 over last month. So it increased to 3,491. Now looking at these two numbers, if you look at the inventory, we are only at 2,711, an increase of 179. So obviously the inventory and the new listings is still not enough for the amount of sales that we are seeing on a month-over-month basis. And so therefore our months of supply, even though it didn't drop as drastically as last month, we still saw a drop from 0.95 to 0.94. So we are less than a month of supply as of right now. And what does this mean? If all properties that were on the market sell without anything new coming on the market, everything would sell in 0.94 of a month. As far as the stats go for each property type, we will go into this more detail with each property video that I make, but just taking an overall view. So you can see there's an improvement in new listings year over year for detached and semi-detached, while sales are relatively lesser year over year for semi-detached and apartment. So inventory is still not enough, but not as drastic as last month. There is a shift in new listings, and this has definitely helped. So will buyers now follow through for the next month data and absorb all this inventory as we've seen before? Because the trend is the moment more inventory shows up for any particular property type, buyers show up for that property type and take those inventory off the market. That's what I'm assuming is going to happen. It's not that there is a mismatch. It's more we've just got a surge of listings where the buyers were not there yet, and now the buyers will readjust and absorb everything else off the market. As far as the sales to new listing ratio, everything else is pretty consistent with what we saw last month. The only big change is a huge increase in the rural townhouses to 93%. And as far as months of supply go, everything is below 1 except apartments. Apartments now rose to 1.16. So taking a look at the summary by the Calgary Real Estate Board for each property type, as far as the detached goes, I'm not going to read all the details. Feel free to pause the screen. But going over the summary, detached home sales rose by 1% in April compared to last year. Sales gain in the higher price ranges offset the steep decline for homes priced below 600,000, which is related to the lack of listing and lower price ranges. New listings did report a year-over-year gain of 10%. Detached homes priced below 600,000 saw new listings decline by 34% though. So even though overall we are seeing a year-over-year gain in new listings, but clearly the affordable part of the market where most people are trying to buy a detached property within 600,000, and very soon that is becoming 700,000. So most people are stretching their budget to 700. As far as a lot of properties go, it's very close to crossing that $700,000 mark. So in a few months, I'm sure this will change to 700,000. But as you can see, clearly, when you're looking year over year, we are 34% lower on the affordable part of the market. As far as semi-detached goes, sales activity continues to rise in April, contributing to the nearly 18% year-to-date growth in sales. So obviously, we didn't have a lot of semi-detached inventory last year, and if you were shopping, you would know that. But this year, we saw a lot of semi-detached come on the market, and so this has contributed to an increase in sales. Like I was saying before, the moment inventory surges in any particular part of the market, buyers adjust and show up and take that inventory of the market, and clearly we are seeing the sales here reflect that. Due to gains in new listings, as the months of supply remain below 1 month for the second month in a row. So semi-detached, very tight. Even though we had a surge of new listings, clearly not enough. Row townhouses, row town sales continue to improve in April, contributing to a year-to-date gain of 19%. So new listings have improved by 16% so far this year. This has kept the sales to new listing ratio pretty high at 93%, and the months of inventory below 1 month for the fourth consecutive month. So row townhouses even more tight than semi-detached. For 4 consecutive months, we are below 1 month of supply, and no matter how many new listings come on, it's just not enough. Most affordable districts of Northeast and East, where resale row homes are still priced at 400,000. So that is the only place where you'll get now townhouses priced under 400,000. Everywhere else, essentially, townhouses are now mid 400s to 500,000. Apartments, the year-to-date sales of 2,761 units, a gain of 24%, more than any other property type. And now this represents 30% of sales in Calgary. Can you believe it? This segment alone now contributes to 30% of the sales that we are seeing every month. And this has been possible due to the rise in new listings. So again, same thing. The moment new listings show up, buyers show up, and they're ready to take the inventory off the market. And I will show and I'll prove this to you with a graph later on in the video. So make sure you stick around. However, inventory levels remain 13% lower than last year's and 35% below longer-term trends. Year-over-year supply declines are driven by lower price segments of the market, which for apartment condominiums in units priced below 300,000. And now most one bedrooms are going for more than 300,000. So to say that 300,000 is the affordable part of the market is really an understatement, because most buyers, even though they would ideally like an apartment below 300,000, those days are far gone. Most apartments are between 300 to 400 for a 1-bed and between 400 to 500 for a 2-bed. So depending on where you're looking at, you might be looking at very different price ranges, but that's what we are at for apartments. Moving on to the months of supply, and this is to indicate where you're going to face the most competition. So obviously, lower the bar, lower the months of supply, the tighter the competition, and this is by different areas. So as you can see, for detached, the most competition is in the east. For apartments, we are seeing the most competition in the north. For semi-detached, east, west, south, and northeast, in that order. And row townhouses, the most competition is in north, east, south, and northwest. As far as total sales go, sales data for April is a lot closer to the trends that we've seen in 2021 and 22, but still lower. You still haven't caught up to that point. Jan, Feb, and March were actually significantly lower when we looked year over year. compared to 2021 and 22, but April seems to be a whole lot closer. As far as total inventory goes, we are still extremely tight, and this continues the trend we have been seeing for several months now. When we go all the way back to 2010, we can see we are nowhere close to the amount of inventory that we used to have in the past. As far as the total inventory by price range, this is extremely important. The red lines that I've drawn across every single bar is where we were last month. So you can clearly tell where the inventory has increased as far as each price bracket grows. So you can tell, depending on what your budget is, whether you have more or less inventory than we did last month and whether you're better off or not. So overall, City Center has had the most inventory sub 500, attributed to the high number of apartment condos that have become available. Northeast then follows close behind with concentration in the 500 to 700,000 range, and North in the 700,000 to $1 million range. Month over month, the increase in lower prices is primarily driven by City Center, South, and lastly Southeast for sub 400,000. As far as total sales by price range, as you can see, sales sub 200 in constant decline due to the lack of options. So every single month, that's just been falling short of the previous month's bar that I draw. Sales in the 3 to 400,000 is being driven by City Center. Majority of sales in the 700 to $1 million range is driven by Northwest sales, because obviously Northwest and West being the most expensive parts of the market. As far as benchmark price across different cities, I love this chart for buyers, and I emphasize this every single time. So if you've watched my previous videos, you know what I'm going to say. Make sure you pause and take a look. The best way to look at this chart is pick a price range, because that is something you cannot control depending on how much you qualify for. And then you pick a house type that you would ideally like to get into. I emphasize ideally, because here's what you're going to do. For example, if you decide that the max you can spend is 500,000, but you want a detached property, then all you can afford is East. But you're like, I don't want to move to East. I ideally want to be maybe in City Center, or I want to be, for this case, let's say Northwest. So if you do Northwest, actually what you really can afford in Northwest is closer to maybe a row townhouse or maybe a semi-detached if you increase your budget a little bit. So this is where you can pick your price range, and as you can see across different property types, which areas that you can actually afford. Taking a look at the price trends for the benchmark across the last 1 year, feel free to pause if you want to read into it a bit more. But overall, we can see we are $54,500 higher than April 2023. So if you waited around for 1 year to buy a property, you would essentially be paying more than one down payment for waiting around. And if you actually waited till since Jan 2023, you would be paying $83,600 more on the benchmark price. And this is just across all property types. So it varies a lot, and it gets even more expensive when you look at the cheaper properties. Could we see another year of $60,000 increase in 2024? Or would the rate cuts and buyer rush later in the year bring us closer to actually 80,000 or 100,000 increase by the end of the year? And the 60,000 is very, very believable. I'm actually quite optimistic on the 80,000 mark too. I do think this year overall is going to be stronger than last year, and we're going to see bigger gains. But let's see how the market plays out as we go month over month. So now, taking a look at the year-to-date new listings. As we can see, we are still nowhere close to the longer-term 10-year average, but we're still doing better than 2023 though. And market sales continue to closely mirror new listings data. Buyers absorb essentially anything that they can get, and this is where it becomes very obvious, because the distribution in graphs between detached, apartment, row townhouses, and semi-detached is essentially the exact same as the new listings coming on the market. After detached, apartments continue to be the dominating part of the market for this year. As far as the benchmark price versus average versus medium, how does that compare? You can see here, even though the benchmark has shifted a little bit sideways and is not as strongly upwards as last month, the average though continues to push higher and surpasses the benchmark price for the first time this year. And due to this, does this indicate a higher push on average and median prices overall, but leveling out of properties within the benchmark criteria? So what does this mean? So overall, people are still paying more for properties overall because the median, so the mid-mark, and also the overall average has increased. So not only people are buying more expensive properties, but they're also paying more for the properties that they are buying. But the benchmark price, so the benchmark price is tied to very specific property types. And so those have not seen necessarily as much of an increase, which is why you see a sideways shift towards the price. But what is this average price overtaking the benchmark price going to indicate? I believe it's going to be a very strong year ahead, and we're going to continue seeing pricing, and the benchmark will adjust back into the original curve. And so if you enjoyed this video, make sure you check out my other video about different property types, because they will go a lot more in depth with different areas and also the stats for each property type. It's extremely important to understand what type of property you're buying, how it applies to different areas, because each community also does operate as its own macro market, and you can't just look at Calgary overall. And so I look forward to chatting with you guys. I love those conversations, and those have been always extremely helpful. I've had a lot of buyers who actually switched over from other realtors after they got tired of losing 7, 8, 9, 10 offers. And based on the stats and the data that we have, we are able to empower the buyers so much that we essentially get the first, second deal that we put an offer on. I look forward to chatting with you guys. My links are in the description. Feel free to book a call. Absolutely no obligations. People find those calls extremely helpful because we go a lot more in depth with just exploring different parts of the city, what their lifestyle is, and essentially finding the right property and the right community that fits what their goals are. There's no one solution for everybody. Until next time, take care.